Hello everyone, welcome back to my channel. I'm Debbie Lee here with the White Samurai Investment Group today, and today we are going to be diving into one of the most powerful, life-altering topics I've seen transform everyday people in real time. The top ETFs to invest in for long-term wealth. Specifically, we're going to be talking about the S&P 500 ETF, the total US stock market ETF, and the NASDAQ 100 ETF. So now let me tell you why this topic matters so much, especially for the working class communities I speak to, that I also educate and I also care about very deeply. So over the past year working at White Samurai, I have seen something that honestly has shocked me to my core. It wasn't the number of wealthy people that we work with or like the scale of their portfolios. It was that most of them weren't even doing anything very complicated. They were just day trading. And they weren't picking risky stocks either. They weren't trying to time the market, and they also weren't trying to check their portfolios honestly more than once a month. Instead, sorry, let me just fix this up. Instead, almost every single wealthy person that I have studied, that I have spoken to, that I have worked alongside, and they all use the same few vehicles to grow their money very quietly in the background, very steadily, and definitely very predictably. So what are those vehicles? They are the ETFs. So let me just write down long-term top Okay, so those ETFs, they are very simple. They're very simple, very diversified, very low risk ways to own hundreds or even thousands of companies without needing to be a finance expert. Meanwhile, working class people who genuinely want to build wealth, who are very motivated, who are hungry, who are teachable, are often given the opposite message. Investing is risky. You need a lot of money to get started. You need to be an expert and know all of the knowledge. You could lose everything. You could risk it all. And I understand why. Most of us grew up with parents who were just trying to survive week to week. We weren't even taught about investing at the dinner table. It wasn't even a casual conversation at all. And we definitely weren't given financial models, and we also definitely weren't even handed the right rules of the quote unquote wealth game. But here's the truth that I have learned. ETF investing is the bridge that finally makes wealth accessible to normal people, such as myself. This is exactly what happened to me. So it's the first step that doesn't require you being a genius or you having luck or a background in finance or a massive salary. It's simple, it's low maintenance, and it has been the backbone of long-term wealth for millions of people who quietly reached financial freedom without shouting about it all over social media. So today, we are breaking down 3 of the most powerful ETFs that anyone, especially the working class people, can understand and learn and potentially use as the foundation of their wealth strategy. So, pardon me, number 1. Oops. The S&P 500. Oh no, my marker. S&P 500. So, what are the names? VOO? SPY. So, the S&P 500 is the backbone of American wealth creation. So, number 2 is the total US stock market ETF. So what's the code for that one? VTI. And number 3. So, number 2, the total US stock market is the complete picture of the entire US economy. And number 3, the NASDAQ 100 ETF is the home of the world's fastest growing tech companies. So let me just write that down. NASDAQ 100. Okay. So this is what we will be talking about today. You see that? I hope so. Okay, so these are just ETFs, right? They're not hype, they're not trendy, and they're definitely not speculative. So they're all proven, they're all long-term, historically strong performers that the wealthy rely on, even when the economy looks uncertain. And today we are going to break them all down in a way that makes sense for you and for your family so that you can tell everyone around you as well. And it's going to be the backbone of your journey into financial strength. So let's start with the story before we get into it. So this will help you see why ETFs matter so much. So I want to tell you a story about someone I met earlier this year. Someone whose life, whose mindset, and whose financial future changed because of 3 simple ETFs and the humility to admit that she didn't know what she didn't know. So let's call her Danny. So Danny is a 34-year-old single mum from Manchester who worked 2 jobs, one as a barista during the day and the other as a supermarket shelf stock stacker at nighttime. So she was always exhausted, so overworked, and constantly behind on all of her bills, and she was just worried about surviving. And when you live in that survival mode for long enough, you stop dreaming, you stop planning, you stop believing that your life can shift. So when she first came into White Samurai, she sat across from me with that look that I've seen way too many times. I've seen it in myself as well. Her face just screamed, I work so hard. Why am I still struggling? Literally. And she wasn't like a reckless person. She wasn't very responsible. She wasn't lazy either. She simply just grew up like many of the working class people, without any tools, without any education, and without the right conversations. She was just doing everything that she was told to do, to work hard, to show up, to be responsible, but still she felt trapped. She said something that resonated with me. She was like, I'm in my 30s and I don't even know what wealth feels like. But what she really meant was, nobody taught me how money grows. Nobody showed me where to put it. Nobody explained how investing works. Nobody taught me how to build, only how to work. So I asked her one question. If your money could work for you in the background, would you even let it? And she looked at me like I was crazy. She laughed and she was like, what are you talking about? She thought that it was unrealistic. She didn't think that was real. And when her laugh faded, she was like, I just don't know where to start. So we started small. It was painfully small, but it was meaningful. We started with the S&P 500, with the total US stock market ETF and the NASDAQ 100 ETF. So 3 funds. Nothing crazy, nothing hype, nothing trending, nothing new, nothing risky. So there was no stockpiling, there was no stock picking, there was no charts, there was no gambling. Just 3 slices of the strongest companies in the world that her and I both bought consistently every month. So she began with, like, what was her equivalent? I can't remember what her equivalent was. So it was about like $50. And do you know what she said to me in her first month? It doesn't even feel like enough. And that is the biggest part that most people struggle with at first. The working class people, they just are so used to surviving to think that slow progress feels like no progress. But I told her what I'm telling you right now. It's not about the amounts, it's just about the identity shift. So poor people think $50 doesn't matter. Wealthy people know how $50 compounded monthly can change everything. So her second month came and she added another $50, but it was nothing dramatic, right? There was no fireworks or anything. But by the 6th month, something began to happen that by the 6th month, something happened that had nothing to do with her money. She walked into the office with her head a little bit higher. I could tell that she was a little bit more confident. But she wasn't wealthier yet. Not financially anyway, but her relationship with money had changed. For the first time in her month, she wasn't starting from zero every month. She had ownership and she had her growth working for her quietly in the background. But she also had exposure to the companies that she could never afford individually, like everything, like Apple, Amazon, Microsoft, Nvidia, but through all the ETFs. And that really changed her. It shifted her energy and her confidence and her sense of control in her life as well. So she suddenly saw the future and she understood that what it was all about. So by the 9th month, she increased all of her contributions to about 80, I think she doubled it. It was about $100. And then by the 12th month, she was raising it even more by 150. But not because that she was making any more money, but because she was seeing what consistency was doing. She was watching all of her investments grow and she was watching her portfolio expand. And she was also watching her compounding become real. And she was like, Debbie, I feel like I have a say in my own life again. And I was like, yeah. So by the end of the year, her portfolio had grown by a few $100s, compared to, it was small compared to millionaires, but monumental compared to where she started. And because that a few $100s represented something priceless to her, a working class woman who finally escaped the lie that wealth isn't for people like her. And that is the real story behind the ETFs, not the charts, not the returns, not the fun tickers, but the fact that they give ordinary people who were never taught, were never supported, were never guided, access to long-term wealth that once only belonged to the elite. Danny didn't become wealthy in a year, but she became wealth-minded. And that mindset shift, that is where generational change begins. So that brings us to topic number 1, why the S&P 500 is the foundation of wealth. What is happening? So when people talk about beginner-friendly investing, the S&P 500 is usually the first name that pops up, right? But what most folks don't realize is that the S&P 500 isn't just beginner-friendly, it's basically the foundation that even all the wealthy investors rely on to maintain and grow their wealth long-term. The problem in working class communities is that the S&P 500 is really rarely expanded in a way that actually makes sense. So someone might say, oh, I just bought an index fund. But nobody breaks down what that actually truly means and how it works. And more importantly, nobody tells you how this one simple investment could have completely transformed the financial lives of people like your parents, or literally anyone who's felt stuck living paycheck to paycheck. So let's break it down clearly and practically and in a way that genuinely empowers you. So What is the S&P 500, Debbie? Tell me already. And why does it matter for your life? So, the S&P 500 is pretty much the biggest, most successful companies in America. The top 500, the S&P 500 is the top biggest and most successful companies in America that dominate their industries, shape the global economy, and continue growing over time. When you invest in the S&P 500, like the VOO or the SPY, you're not just picking one company, you're buying a slice of all 500 companies. So that means when Apple wins, you win. When Amazon wins, you win. When the economy expands, your wealth expands with it. It's like owning a tiny piece of corporate America without even needing to guess which company will take off next or worrying about picking the wrong stock. No stock picking stress as well. No watching the charts all day. No gambling your hard-earned money. Just long-term, reliable, diversified growth. What is number 2? So, why wealthy people love the S&P 500? So, what is happening out there? So, here is what most people don't understand. The wealthy don't buy ETFs like the VOO because they have to. They buy them because they're proven and they're stable and they're predictable. Rich people play the long game. Working class people are pressured to play catch up. So the S&P 500 bridges that gap, and it has averaged roughly about 10% per year over the long term. And that historically means it doubles every 7 or 8 years. That's crazy, right? So if your parents or grandparents had invested $200 a month into the S&P 500, after 10 years, they would have had like just under 40 grand. Under 20 years, 140-ish. After 30 years, 365. After 40 years, almost $1 million. Nearly $1 million in retirement wealth from the equivalent of a weekly takeaway or 2. So this is why wealthy families get richer, not because they're smarter, but because they understand the systems, and now you do. Why the VOO and SPY should be the first ETF in your portfolio. So there are thousands of ETFs out there, right? So why does almost every experienced investor say, start with the S&P 500? Because it ticks all of the boxes. Diversification, you're spreading your risk across 500 companies instead of 1 or 2. Low cost. Let me... Diversified. Low cost. So, especially the VOO, ridiculously low fees, meaning more growth stays in your pocket. Strong track record. Strong record. So we're talking about decades of consistent growth, even with the recessions, even with the crashes, even with pandemics, inflation, everything. And it's passive, so there is zero skill required. Pardon me. So you don't need to be a market expert. You just need discipline and practice. And it automatically updates as well. So companies that fail get kicked out of the index and new winners replace them. So you're always invested in the strongest businesses. Oh, that was that one. Okay, so which one should you choose out of the VOO or the SPY? So people love asking, which one is better? But here's the truth, they're nearly identical. They track the exact same companies, but the only real difference is the VOO has a lower cost. And it's best for long-term investors, but the SPY has a little bit higher of a return percentage per year. So that one is a lot better for traders because most long-term investors choose VOO because it's cheaper over time. But if you pick SPY, you're still it's still perfectly fine. So how does the S&P 500 fit into a working class financial plan? Here is the part that finance world would never teach the working class. You don't need $10,000 to start investing. You also don't need to pick winning stocks, and you don't need to time the market. You just need a system, a repeatable monthly action. Let's say that you invest $100 per month or $200 per month or $500 per month. Set it automatically. Don't even think about it. Don't touch it, and don't panic when the market dips either. Dips are discounts. So if you invest $200 a month into the VOO starting today, in the next 10 years, you'll have just under 40 grand. In the next 20 years, you'll have just under 140 grand. And in the next 30 years, you'll have just under $365,000. 40 years, you'll have just under $1 million. That's crazy, right? So that's how ordinary people turn small money into life-changing wealth. Not because they made one big decision, but because they made one small decision consistently. So what happens when the market crashes? People fear the crashes, right? Wealthy investors love them though. Why? Because during a crash, all the stocks go on sale. No brainer. The ETFs get cheaper, your monthly contributions buy more shares, and your long-term profits increase as well. So if you bought consistently through the 2000s crash, the 2008 financial crisis, and the 2020 pandemic, and the 2022 inflation crash, you would have made huge returns afterwards because the working class is taught to panic, but the wealthy are taught to prepare. That's why mindset matters as much as your money. So, who is this ETF perfect for? It is perfect for beginners, for busy people, for full-time workers, for small business owners, for parents, for anyone who doesn't want to pick stocks, for anyone who wants stress-free investing, and for anyone who just wants their money to grow quietly in the background. If your goal is long-term wealth, retirement, financial freedom, passing money down to your kids, building generational wealth, growing money without high risk, then this core ETF is what you should start with. So, the truth that working class people were never told. If you come from a working class family, you were probably told investing is risky, only rich people invest, save your money into the bank, you need a lot of money to start with. All lies. All lies. Keeping money in a bank guarantees that you'll stay where you are. Technically, you'll actually go behind. So, investing in a diversified ETF gives you a path out. Not overnight, not in a month, but steadily and consistently, and definitely very predictably. So this is how wealthy people build wealth quietly, and now you also have access to the same tools. So that brings us to topic number 2. The total US stock market ETF, the everything in one wealth builder. So if the S&P 500 is the foundation of long-term wealth, then VTI is, is the entire house. Every room, every hallway, every expanding corner of the US stock market. Where the VOO gives you the top 500 companies, the VTI gives you over 4,000. So where the VOO invests in large companies only, the VTI covers large, small, mid-size, and also micro, where the VOO gives you giants, the VTI gives you the giants and the up and coming. So that could be the next Netflix or the next Apple. So this makes the VTI one of the most complete, accessible, powerful ETFs that the working class and middle class people can own, because it lets you benefit from the entire economy, the entire economic engine of America, without needing any expertise or stock picking skill or complicated strategies. So let's break it down. The VTI is so powerful, and why it's often the first or the second ETF that wealthy investors choose for long-term growth. So what actually is it, and why does it matter? The VTI stands for the Vanguard Total US Stock Market ETF. So, pardon me, this means exactly what it sounds like. It gives you ownership of nearly the entire US stock market. So it's not just all the superstars or the biggest people on top, but it gives you the large cap companies, the mid cap companies, the small cap companies, growth stocks, value stocks, tech, healthcare, energy, finance, real estate, and more. So it's a one-stop shop pretty much for diversification. So instead of thinking, which companies should I invest in? You simply invest in all of them automatically. It's the simplest, the most stress-free way to build wealth. Why wealthy investors love the VTI even more than the VOO. So the wealthy love the VTI for a multitude of reasons. There is even more diversification. That's a big word. Diversification. So there are over 4,000 companies, meaning your risk is spread incredibly wide. There is exposure to small and mid caps. So these are younger companies that can grow faster than the large cap companies in the S&P 500. So some of the world's biggest companies started small, obviously, and investors who held total market ETFs automatically caught their growth early. So you get the innovation of startups and the reliability of established corporations. So small and medium cap. The next point is that it has a lower volatility than picking individual small cap companies. So small companies are risky on their own, but inside a big ETF, the risk is softened and the reward is preserved. lower. Lower volatility. So you don't also have to keep track of anything. How will I write that? Peace of mind. So this index automatically updates itself, so all the losers get removed and all the winners get added. The portfolio evolves with the company, with the economy, pardon me. So the VOO versus VTI, which one's better? So everyone asks this question. Should I invest in VTI or VOO? Here's the truth. Both are amazing. Both build long-term wealth. Both are used by millionaires and everyday people. But they do have small differences. So the number of stocks included in small caps, so they are included in the VTI, so they have around like 4,000 on average, but the VOO has 500, obviously. It's called the S&P 500. And which one is slightly more diversified? So the VTI is more diversified compared to the VOO. And the long-term returns. So the VTI has a slightly lower or similar, and the VOO is slightly higher. So the VTI is more diversified, but the VOO is slightly higher historically return because they have the large cap companies dominating. So many investors choose both, actually. And this brings us to why VTI is perfect for working class investors. So working class families are taught to save, but not to invest, because you need to be careful with your money, you need to grow it, but the only way to grow it is in bank. And you need to protect all of your pennies instead of building any pounds. So, but the VTI changes that. The VTI is perfect for people who don't have time to analyze any of the stocks, don't want to monitor the markets, don't want to gamble, but they want to build wealth quietly in the background. And they want one ETF that does everything. They want automatic diversification, and they want to benefit from both established and emerging companies. So it's pretty much a set and forget and then just live your life type of investment. So you don't need to time the market, you don't need to predict the economy, you don't need to understand all the complicated charts, you don't need to worry about picking the wrong stock. You simply invest consistently and let the US market do the heavy lifting. So the real power of the VTI, capturing the next big thing early. So we'll think back to companies like Amazon and Netflix and Tesla, Nvidia, Meta, Google. None of these started as giants. They started small. They struggled and then they grew. And investors with VTI owned them. before they became what they are today. So that is a huge deal that most people miss. VTI automatically captures the entire journey of winning companies, from small cap to mid cap to large cap to industry leader. You don't need to guess who is the next big winner. You already own it. And what could a VTI investment look like over time? So let's imagine a working class person invests into it. So $150 per month into VTI. Here's what could happen. So in around 10 years, they would have just under $30,000. In 20 years, just under $100,000. 30 years, just over $275,000. 40 years, $740,000. Now imagine $300 a month. So in 40 years, that could become $1.5 million. So this is how ordinary people become millionaires. Not through gambling, not through luck, not through get rich quick schemes, but through consistent automatic investing into ETFs like VTI. So why Vanguard makes a difference? Something that many people overlook is who created VTI. Vanguard. The company known for its low fees and investor first philosophy. Vanguard created the first index fund and built the entire idea of low cost investing. They don't have outside shareholders either. They're owned by the people who invest in their funds. So that means their incentives are aligned with your success. So, no brainer. Low fees also equal more growth in your pocket. So VTI's expense ratio is incredibly low, which matters massively over the decades. And what happens during the crashes? So just like the S&P 500, VTI doesn't avoid market crashes either. No ETF does. But the difference is how recovery works, because VTI is broader. It often recovers faster or steadier because some sectors bounce back quicker. Small caps benefit early in recoveries, innovation surges after downturns. So if you keep investing through downturns, you're buying more shares at a cheaper price. This is where wealth is built. Crashes feel scary in the moment, but historically, they are always led to higher highs later. So, the type of investor who benefits the most from VTI is perfect for someone who is an early investor in like their 20s or 30s, parents building generational wealth, busy full-time workers, people who want a hands-off investing strategy, long-term thinkers, anyone who wants one single ETF that does everything, and anyone who wants exposure to growing companies early. Also, someone who values safety and simplicity and long-term compounding. So it's the ETF for the everyday person who is serious about wealth without the mental stress. So the truth, working class people were never taught about the total market wealth. So your parents were taught, don't invest, it's risky. Stick to savings account. You need a lot of money to start investing. But VTI proves something very powerful. You can start with small amounts. You can grow wealth quietly. You don't need to be an expert. You just need consistency. While the wealthy were building multi-million-dollar portfolios through the total market investing, working class families were just stuck in cash, losing their value to inflation. Now that cycle breaks with you. VTI gives you access to powerful, diversified, generational wealth building that used to only be understood by people with financial education. And now you have it too. So this brings us to the third topic, the NASDAQ 100 ETF. So triple Q or triple QM. So the high growth machine of modern wealth. if the VOO is stability, if VTI is the total market balance, and then triple Q is the accelerator, the engine that powers long-term exponential growth. So this ETF is where innovation lives, where the future of technology, communication, entertainment, and modern infrastructure are built, where working class people get the chance to own the world's most explosive, innovative companies without the stress of picking individual winners. So, Triple Q is not a safe ETF. It's a growth ETF. It moves faster, both up and down, but over time, it has historically outperformed almost every major index in the world. So this is the ETF that powerful investors use when they want life-changing, long-term growth. And it's the only one everyday people should understand, because it shows exactly how wealthy think differently about risk, about innovation, and about compounding. So, what does the Triple Q actually track? Understanding the quote-unquote beast. So, the Triple Q cracks. The Triple Q tracks the NASDAQ 100 index. So, the top 100 non-financial companies listed on the NASDAQ stock exchange. So, in simple terms, it's just the world's 100 most innovative companies. So, think about all the giants like Microsoft, Nvidia, Apple, Amazon, Meta, Google, Netflix, Adobe, Tesla, Broadcom, and dozens more of companies shaping the world that we live in. So unlike the VOO and the VTI, which represent the whole economy, the Triple Q represents the future of the economy. So this is the sector, I will write that down actually. So this is sectors that are growing the fastest and redefining how we work, how we live, how we spend, and how we connect. So why has the Triple Q outperformed most indexes over time? So the Triple Q has historically delivered some of the strongest long-term returns of any large ETF, but why? Because the sector is concentrated. So where the VOO spreads across all sectors, the Triple Q focuses heavily on technology, artificial intelligence, cloud computing, e-commerce, semiconductors, communication, technology, digital entertainment, biotech innovation, cybersecurity, software, and automation. So these industries grow faster than traditional sectors like energy or utilities or manufacturing. So when you invest in the Triple Q, you're not just buying companies, you're buying innovation. And innovation compounds faster than slow traditional industries. So which one should we buy? The Triple Q or the Triple QM? So both of them track the exact same index, but the Triple QM is simply the lower cost version of the Triple Q. So Triple Q is older, very popular, slightly higher fee. Triple QM is newer, lower fee, and identical performance. So if you're investing long term, Triple QM is usually better because the lower fees equal more money compounding in your pocket, but both are excellent. Both give you the same holdings, both represent the heart of modern innovation. So why do the wealthy investors allocate to Triple Q even with higher volatility? So wealthy investors don't fear volatility. They understand it. They know that volatility equals risk, but risk equals reward. And innovation is long-term gain while the market bounces up and down. Technology steadily pushes forward. You may see dips on the charts, but the technology sector has never stopped advancing. Every generation brings new inventions, new systems, new digital infrastructure, new platforms, new industries, new everything. So wealthy investors buy into growth because they know the world is constantly upgrading, and Triple Q captures that upgrade every year. The working class investors often avoid growth because they fear all of the temporary drops. So wealthy investors embrace growth because they understand long-term expansion. So that's why understanding the Triple Q is so important. It teaches everyday people to stop fearing volatility and start embracing intelligent risk. So why is the Triple Q the growth engine of a well-balanced portfolio? If you look at how millionaires structure their portfolios, you rarely see them go all in on a single market, right? They buy in layers. They have the stable core. So they have the VOO or the S&P 500, a global safety net like the VTI, and a growth layer like the Triple Q. So the Triple Q is that growth layer. It's the 10 to 20% slice that dramatically increases long-term wealth without overwhelming the portfolio risk. So if you buy the Triple Q and blend it with the VOO and the VTI, your stability protects you. Your diversification balances you, and your growth exposure elevates you. This is the structure wealthy investors use, whether they're managing $10,000 or $10 million. And now working class investors can use the same strategy. So how does the Triple Q actually make everyday people wealthy? Let's be for real right now. Working class people don't get rich from doing overtime or saving or keeping the same job for 40 years. Definitely not. Or even keeping money in the bank or hoarding cash under a mattress for safety. They build wealth when they own assets that grow faster than inflation. Triple Q is one of the strongest long-term growth assets available. Here's what consistent investing can look like. If someone invests $150 per month in the Triple Q, over 10 years, just over 30 grand. 20 years, 130 grand. 30 years, $500,000. 40 years, just under $2 million. And that's without increasing contributions. Crazy, right? So this is the hidden truth. Working class people don't stay poor because they're lazy. They stay poor because they never told how compounding actually works. Triple Q is the kind of asset that shows them what's possible. So we also need to understand the downside and why it doesn't break you. So being honest and transparent with your audience builds trust, right? But here's the reality. The Triple Q does have a higher volatility. Oops. It has a higher volatility than the VOO or the VTI because it can drop harder during the market crashes. So tech stocks can be sensitive to interest rates, but here's the truth wealthy investors understand. Tech crashes recover faster. Innovation rebounds quicker. The long-term trend is always upward. Buying during dips multiplies long-term returns, and you only lose if you sell out of fear. So the Triple Q punishes emotional investors, but it rewards the disciplined ones. If you stay consistent, hold long term, and continue investing, even during the downturns, Triple Q becomes one of the most powerful wealth vehicles available. So, who is it perfect for? It's perfect for the working class who want faster long-term growth, exposure to innovation, to own companies shaping the future, a portfolio that outperforms inflation, a chance to elevate their wealth over decades, access to markets previously only understood by wealthy investors. So Triple Q is not for people who panic when the market drops below 10%. It's for people building long-term wealth who understand that the world's most innovative companies always climb higher over time. So, the real secret. Wealthy people don't chase safety. They chase asymmetric upside. So, opportunities where potential reward massively outweighs temporary discomfort. So, the Triple Q represents AI advancement, cloud technology, robotics, semiconductors, renewable energy, biotechnology, automation, digital platforms, and next generation computing, and also software and cybersecurity. So this is the future. And wealthy people don't wait for the future, they invest in it. Working class people have been conditioned to fear anything that moves too fast. But here's the truth, if your investments never move up fast, they'll never grow fast. So the Triple Q teaches working class families that wealthy families always understood. Growth is not the enemy. Volatility is also not the enemy. Ignorance and inaction are the enemy. So why the Triple Q completes the portfolio built in this video. So we have already covered the VOO, which equals stability, the VTI, diversification, and the Triple Q, growth. These three ETFs together form a professional grade millionaire level portfolio strategy. So if used together, they give your audience a rock solid foundation, exposure to the entire US economy, exposure to the most powerful growth companies in the world, long-term passive compounding, and a realistic path to financial freedom. So this is how everyday people lift themselves out of survival mode, and break generational patterns and start with building wealth confidently. This is how the working class become powerful. Not through guessing, not through trading, not through luck, but through consistent ownership of high quality, diversified, growth focused assets. So let me show you this before I forget as well. So this is everything that I've taken down. You don't need to write any notes, I've got them right here. Okay. So, if you are ready to stop letting your money sit idle and start letting it work for you, White Samurai Investment can help you take the first step. Whether it's setting up an automated investment into the S&P 500, the US Total Market ETF, or even the NASDAQ 100, we can provide the guidance, all the strategies, and the support to help working class people like yourselves build long-term wealth. Start small, stay consistent, and watch compounding do the heavy lifting while you focus on your life. Your financial freedom begins the moment that you take action. So, as a summary of this video, today we explored three ETFs that form a strong foundation for long-term wealth. The S&P 500 for stability, the total US stock market ETF for the total market diversification, and the NASDAQ 100 ETF for growth through innovation. So by consistently investing in these three ETFs, you're owning the most powerful companies in the world, benefiting from decades of historical growth and positioning yourself for financial freedom without guessing, without gambling, or without stress. So thank you for everyone for making it this far. Please don't forget to leave a like, a comment, and subscribe to my channel where we discuss topics of financial freedom. And please check out the Wyatt Samurai Investment Group for all of your nitty-gritty questions and queries, or you can comment or message me on myself and the team will do our best to get back to you. Thank you for watching this video, and I will see you in the next one. Bye.